The infinite banking concept is a process, not a product. And we do use a product as a tool in the infinite banking concept, and that tool is really important. So, much like you in your avenue of work, whatever it might be, having the right tool for the job is really critically important. I have two brothers in construction. Trust me, I know having the right tool for the job is really important. And that's really what we're talking about within the infinite banking concept. When we talk about specific products, it's really about having the right tool to do the work. That work is to control the flow of money into and out of our hands over the course of time and be able to capture and recapture those costs, which is the banking process. And the product that we use to do that is dividend paying whole life insurance through a mutual provider. And there's explicit reasons why we use that particular product. So we're not going to use universal life. We're not going to use or any variation of universal life, like variable universal life or index universal life, IUL. We're not going to use those things. So the reason that we're using one type of product in this particular situation, like we just talked about, is for very certain reasons. When you think about the process of banking, you think about a bank as a whole. What's one thing they need to be able to rely on? It's that they have a supply of capital and an ever increasing supply of capital that continues to grow and or never changes. And that's what we're talking about when we're forming this foundation or this foundational structure of the infinite banking concept, is to have that foundational core asset that we can build upon, that we can count on. And the reason we use dividend paying whole life insurance through a mutual provider, number one, it's guarantees. So there's guaranteed cash value growth within the contract, and that's naturally only going to go one way. So you're going to get uninterrupted compounding that way. Secondly, is the dividend structure works very much in the favor of a individual practicing the infinite banking concept, because those dividends get reapplied as paid up additions. They grow the death benefit, therefore they grow future dividends, and it continues to compound on itself and continues to go only, again, one way. So that capital pool is always increasing when we are paying those premiums, et cetera. So that stability aspect of dividend paying whole life insurance is a reason why it's used as a banking tool. Separately, we also have guaranteed liquidity access within the contract. Unlike IUL and unlike some of these other products out there, the guarantees are always going to be there. One, because it's always going up. Two, we have this access contractually to go access the cash value via policy loan through the insurance company. In IULs and in some of these other types of contracts, yes, you do theoretically have liquidity access, but it can actually very much disrupt the contract as a whole. And it may actually cause other problems to take place within the product and potentially even cause it to fail or be in a negative situation. I know some people will say, well, yeah, you didn't fund it enough, you didn't do that. In dividend paying whole life insurance, that isn't a big deal. Like, you don't have to worry about that nearly as much. Pay the premium, and you're going to have that as a factor, as an ability to go do so. It's not well, I have all these caveats of things I must have to do in order to make it happen. That's why Nelson clearly articulates on page 39 that he does not advocate for universal life as an option for the for the infinite banking concept. So those are some critical reasons why we're not using that type of a product, or any other product for that matter. Now, granted, you theoretically can bank with anything. So that could be cattle if you're a farmer. It could be your home. It could be lots of different things. Someone could use a HELOC, for example, to do some of this stuff. And I've certainly seen some of the things out there that talk about it. But again, who's benefiting by the financing function of all those things? It's going to be the third party bank. So they're the ones who are going to, receive a lot of that interest. There's also a lot of steps you have to go through to get approvals. And again, they are the ones holding the keys to whether or not you can access or tap into that capital in those particular situations, whether that's cattle, a home, cars, whatever it might be. In this case, with dividend paying whole life insurance, It's contractual. You, as the owner, can expressly execute that aspect of the contract, no ifs, ands, or buts, and you control the repayment terms. There are no, in a lot of these other situations, somebody else is controlling the repayment terms. They are telling you when you must pay, when it must be paid by, how much you have to pay. Practicing the infinite banking concept properly, you do not have, you're the one in control. You don't have to rely on someone else to tell you that. So that is one of the most critical reasons, that amongst some of the other things I've already just stated, of why we use dividend paying whole life insurance as the product, as that specialized tool to control the banking function. So in our next video, we're going to talk a little bit more about how we design a particular policy for the use of the infinite banking concept. Now, understand the infinite banking concept, all too much emphasis gets placed around product design, but we are gonna talk a little bit about that in the next episode. So stay tuned, watch for the next video to come up here, and hopefully you'll take a look and a listen, and you'll be able to learn a couple of things along the way. Feel free to like and subscribe, and we'll talk to you again soon.